Rosemary Armao, and this is my podcast, Beyond the Brink and Fighting Back. I am excited about today's show. I called up my old friend, Mark Wittman. We used to work together on the round table at WAMC. I called him the other day to propose this podcast. And all I had to do was say, hey, there's a lot of economic stuff going on. I need your take on it. And he was off and running. I kind of wish, Mark, I'd been recording. We could have just skipped today entirely because we went on and on about it. There are a number of economic issues. They range from the super serious, which is going after the Fed, to the kind of silly, which is we don't have pennies anymore. And you are going to want to hear Mark's take on many of these things. He is not like your typical economics professor, ivory tower and boring. He's a Wall Street guy, an investment banker, so he knows what he's talking about, but he can talk about it to people like us who know less than him and still make it sound interesting. So with that build up, Mark, why is the economy doing as well as it is? I thought by now with tariffs and crazy Trump policies, the liberals all said we'd be in the tank into a depression or recession or something horrible, and we're not. So what's going on? Were the libs just wrong and Trump is right?
Well, Rosemary, thank you for your introduction. It's always a pleasure to speak with you. Let me answer your question by saying that the answer is partially in your question when you said that the libs said we'd be in a recession. I do think when you look at economic predictions, it's pretty well proven that how people feel about the economy and what they think the future holds economically is in part oftentimes dependent on their political bent. So what we heard from a lot of liberals or people who opposed Trump's policy was that the sky was going to fall. Now, in their defense, Liberation Day had tariffs well in excess of 20% that were contemplated. And even just as importantly, people anticipated that would then lead to a trade war, and it wasn't clear where the bottom was if that was to take place. So the predictions were for a world that didn't come to pass, in part because of TACO, as I think the FT, the Financial Times of London, coined that phrase, or one of their opinion writers coined that phrase. Trump does seem to listen to the markets to some extent. It seems like he did that in his during his first term, and he's done that now, and he dialed back. The other big assist that Trump got was from Xi Jinping. There hasn't been enough written about this in my mind, that the tariffs that Trump would have put on China had they not retaliated so effectively would have been much more severe and further crimped U.S. economic conditions.
Right.
But Xi fought back very effectively. As a matter of fact, I think the world leader that's probably happiest about Donald Trump's term thus far is probably Xi Jinping. And he gave Trump an assist by making tariffs against China far more difficult than many expected. And therefore, Trump had to moderate that part. So instead of in excess of 20% effective tariffs, we're working now, I think, at about 14% rate. The producers overseas and those involved in the chain that delivers products to U.S. consumers have been slow to shift all the costs onto the consumer. The other thing is, even once these tariffs hit, they're pretty reasonable estimates that you're talking about a 1% change in inflation, sort of smeared over 18 months, but a one-time cost. Once that price increase has been run through the system, it doesn't continue to get worse as inflation does. So it won't show up in the inflation measure, but only once. And the diminution of economic growth has maybe been 1%, or maybe will be 1%, again, smeared over 18 months or so. But I think those are the main reasons, which is there was a far worse expectation, in large part or some part driven by political bent of those who were offering their predictions. Trump chickened out and was forced to back up on his tariffs. And the whole net effect of it we're probably seeing it in the economy, but it's far less.
Much slower. It's happening slower than we thought it would be because
Well,
of.
but yes, and it's also less severe. I mean, the economic growth in this economy, we are in a sea change around particularly AI. And
Right.
and the analogy I like to talk about when you think about AI is the railroads. The railroads were an incredible step forward in the productivity of the United States of America, but it was not they were not without many booms and busts within that development. There was actually a recession that was in large part caused by a bust when a number of railroads went bad and the banks that had financed them followed. So we're going to see economic growth, but the curve isn't inexorably upward. But what we are seeing now is steady growth, and even Trump's policies, once his wings were clipped, may well have slowed things down and made things more difficult, but they haven't ruined the overall environment.
And is your opinion changed at all by what's happening currently? That is, in his dispute with the EU countries over Greenland, he said either you give me Greenland, apparently as a consolation prize for not getting the Nobel, or I'm going to raise your tariffs again. And the EU is saying you do that, we're going to raise the tariffs on the things that people are buying, Americans are buying from our country. So again, we have predictions of a trade war. Some people are not taking that seriously. They think it's just a lot of talk on both sides. What's your feeling about that?
I would be surprised to see us engaged in an all-out trade war. And I think the market shares that skepticism. Even the European markets, they sort of quivered today, but they did not in any way collapse as they would have. I think the general expectation is that once Trump understands the potential consequences, he'll find a way to back up. There may be even some indication he's done that already in a conversation with one European leader. He said he had some bad information and has started to backpedal apparently a little bit. But the markets, the one thing I will say is, markets work, as I've said many times, on emotion and expectation in the short run, and they don't know the answer. So if we do end up in a trade war, the markets will look very different than they do today.
Yeah, let's talk about that a minute because it's remarkable how upbeat, steady, and excellently the stock market has been over the past year. They've gotten used to the weirdness and chaos of Trump, I think.
When I was a kid, I once tried to overflow the sink in my bathroom. I don't know why, but I did, and then I realized that there was this hole underneath the faucet, right at the top, near the top of the basin where the water escapes if you do something stupid. And again, I think the markets think that hole is there with respect to the United States. Your surprise around how well the markets are doing, particularly the bond market, is well justified. Markets hate a couple things, particularly bond markets. They hate long-term structural deficits, but we have one of those. And they hate central bank capture, which Trump seems to be attempting. So the market
We're going to talk about that.
The market should have serious indigestion, but first of all, there's the issue that Trump may not be successful or may, in his own right, decide he doesn't really want to catch the car that he's chasing. There aren't other great places to put things, and there always is the risk, as I said, the market could be wrong. You could turn on the spout so quickly that you overwhelm that relief hole, you swamp that relief hole in the back of the sink, and that's always a possibility here, but the markets aren't afraid of that yet.
You're listening to financial guru Mark Wittman here, who you're hearing some of those metaphors and comparisons that I love that he uses in describing our economy. And the stock market is doing great. And by every measure that I can see, the economy is doing just fine. Yet you talk to people, you talk to voters, and they're voting their behavior. They don't think things are so good. And a lot of that has to do with inflation and food prices and gas prices. You have an explanation. You talked about how the economy is part ice and part flaming fire. Can you talk about that a little bit for my listeners?
Yeah, I think the analogy when we spoke about this briefly was around the affordability crisis, and in some
Right.
ways, the economy is like an individual whose head is stuck in an oven and his feet are encased in ice. And the doctor comes into the room and says, "You got to get your head out of the oven; it's going to get burnt, and you got to get your feet out of that block of ice, or you're gonna get you're gonna get what's it called?
Frostbite.
Thank you,
Frostbite.
frostbite." The economist comes in and says, "On average, that guy's fine. Just leave him alone." A, a lot of the measures that we have for how the economy is doing don't answer the questions we want to answer. For instance, GDP growth. Well, that's great. So are Americans better off? Well, if you're Joe Biden and you're Donald Trump, and your advisors say people don't feel well about the economy, and GDP is growing, and in Trump's case and in some of Biden's administration, inflation was down. You say, well, what's wrong with these people? But as you learn in statistics, you cannot infer for every subgroup within a larger group that they're doing well. And the issue around
Right.
affordability, and there's a Substack by an author, I think his name is Green, I think it's Michael Green. Yeah.
That's it.
Who,
I've read the
who wrote,
article.
who wrote a great Substack piece around the fallacies that we use to measure what it takes to be active participant in today's economic environment.
Right. He says the poverty line is way, way, way out of date. And it's like 32 or $36,000 for a family of four. He says that's ridiculous. Poverty should be more like 140,000 for a family of four.
Yeah, depending on the geography. And there's a lot of, I think, really good criticisms of his specific numbers and calculations. But his
Right.
point
But the
is,
idea, yeah.
right, his point is that the poverty rate was set on a budget of 3 times the cost of food, because when it was set, I believe in the 60s, that was the largest cost for a family of four, was their food cost.
Right.
Well, basically every other cost has inflated much, much more quickly than food. And so that old measure is no longer all that helpful.
What would those others be? Fuel,
Well, housing is the big one. I mean, it's basically it's housing, and then childcare is another one. And people argue about childcare, saying, well, that's only relevant until you get your kids into a school program. But until you do, if you don't have family around, which, by the way, is far more common now that you wouldn't have an extended family close by than you might have in the 60s. Childcare is a big cost for working families. And so the incremental cost of putting a second earner into the economy is far more expensive than it used to be, because of things like childcare, also transportation costs. And our government assistance to those families doesn't recognize that. And then, because we're using antiquated measures, as they start to earn more and sort of get out of what you'd call a subsistence, or living just at the margin, or just surviving, if you will, we take away more government assistance than they actually earn. And so we make the climb from economic instability to stability very difficult by making the climb more steep as you ascend. And beyond that,
pull away the ladder. We're pulling away the ladder, in other words.
Yes, and we actually pull it away more quickly than they ascend it. The other thing we do is we assume in this country that if you have an unexpected cost, like a medical bill that sets you back as a family, you just dust yourself off and you get back on the horse. The problem is you've probably hurt your credit rating, which does things like limit your access to certain housing options, to what you might do in terms of even job prospects with your credit rating. And there isn't the recognition that once you encounter some economic difficulty, it's not costless to get back on the ladder. You're actually on a different ladder where things tend to be far more expensive. And I think that discussion goes a long way in understanding why we're sort of in two different worlds where the economy as a whole is doing fine, but families who are struggling to find economic security don't feel any better in this country. The other issue is if you look at globalization, Rosemary,
Right.
It's a primary example of yes, the water level rose. The United States as an economy is better off, but the problem is people who were in those manufacturing jobs, their boats didn't rise, particularly in the interior of the United States, and they ended up in worse economic condition. Mm-hmm. And it's no shock that they end up being a lot of the base support for Trump and the mega movement. So again, back to the analogy of the guy with his head in the oven and his feet in the ice. Economic data sometimes gives us reads on how we're doing generally and overlooks the struggles that individuals have. And we've arguably compounded the struggles of individuals in this country by using antiquated measures, including that which we use for the poverty line in America.
Well, I have about a billion different directions I want to go in. Let me see if I can't get this organized. Our measures of economic growth and performance are out of date. Are we even getting those measures now? I'm thinking particularly of the labor statistics that Trump got rid of the director at one point because he didn't like the numbers coming out. And I've looked at what's come out since that time, and they still go up and down. They don't seem to have any sort of pattern. What do I take from that, if anything? Mostly I'm confused.
Yeah, that's a good question. I'm not worried that we're seeing the numbers. The books aren't cooked. The problem is the system for calculating numbers wasn't robust enough to work in the absence of the shutdown. And so what you're seeing are basically are lousy numbers. And that's the problem. If you look at CPI data specifically, I mean, the missing data, CPI is the Consumer Price Index, or the measure of inflation. Thank you. October, the missing data turned October into a hole and November into mush.
Right.
And a lot of economists and journalists who write about the economy had to write something, so the headlines became noise. If you strip out the glitches, inflation is basically back to its late summer trend. There's no fraud here, but inflation is sticky in the high 3%. The rent relief that has been in the numbers is mostly over. And for a monetarist like myself, I still believe that there's a risk that if the Fed stays loose, inflation will creep back up.
All right. Now you have to explain again to my listeners. It's not to me, of course, I know what a monetarist is. You have a different view of what's causing inflation, and it has to do.
Yeah, my belief is, and I believe this is actually really clear if you look at what happened during the bout of inflation that followed COVID, is that people say, well, the government spent or gave away too much money, and that's what caused inflation, right?
That is what Trump says, yes.
Right. And what my answer is no, the money supply causes inflation. If the Federal Reserve, while the government was spending too much money, basically, if you will, printed too much money, and that's what caused inflation. Because if the government hadn't printed it, now the way it printed it is through basically purchasing bonds and then crediting the bondholders with cash in exchange for those bonds. And so when we say printed, it's not literally a printing press anymore. People they buy bonds and press buttons. But if they hadn't pressed those buttons, what would have happened is the government would have given away a bunch of money during the COVID largesse, but it then would have had to find it somewhere else. And what it would have done was issued bonds and take it away from savers. But the money in the system, the number of dollars running around the system would have remained relatively the same. Mm-hmm. Now, there's a complicating argument here called, it also matters how quickly those dollars move through the economy. Initially during COVID, what we call the velocity of money, the rate at which money changes hands in the economy was very slow. Everybody got these checks. They could spend a little bit more on Etsy, but they couldn't really spend the money the way they wanted. And then came, hot vaccine summer or whatever we called it. We were all let out. We thought we had a lot of money. We started to spend it, and we realized that the price of everything went up by how much? Well, about, in large part, the amount by the percentage that the money supply had grown, minus a couple of adjustments, including the growth of the economy and others. And so my belief is that most of inflation is attributable to growth in money supply, not so much in where the Fed sets short-term interest rates, or whether or not it's the government that spends the money or the government that sends it out to taxpayers who then spend it. If you keep the system closed and you don't add dollars, it doesn't really matter who's spending the money.
All right, this is Beyond the Brink, but Fighting Back. I'm Rosemary Armao, the host, and this is Mark Wittman that you're listening to. He's our economist on the hot seat. We're asking him all the questions I have about economics that are just coming through loud and clear in the news these days. Recently, we saw what Jon Stewart described as a hostage video. It was the Fed chair. Mr. Powell explaining that he thought the government, that the Trump government was coming after him as head of the Fed for political reasons. Donald Trump wants interest rates to be lower. He and the Fed do not want to, or have not yet lowered them to the satisfaction of the president because they're worried about inflation. You talked a minute ago, you mentioned central bank capture. Is that what we're looking at here? And is that a destabilizing thing for us to be watching in our government?
Yes, it is destabilizing. I gotta tell you a funny story about that video. I don't do it much, but I was trolling social media that late that evening, or maybe early the next morning, and I saw that video and I thought it was an AI fake. Even though I am, as you know, I keep abreast of what's going on. I couldn't believe that Trump had actually pulled the trigger. I went to the Wall Street Journal, and then I saw that it was sadly true. And I cannot find a credible source of news that says this is a good idea. And the reason it's not a good idea is a couple fold. Number one is the central bank only controls really one rate directly, and that's the rate at which it lends to banks. So if you think of the interest rates, you look at overnight rates as one of them, and then you get out to the end of the branch of the tree, and those are, say, the 20-year mortgage rates right out there, and 10-year bond rates are sort of in the middle. The Fed is sort of a participant pulling down nearer to the trunk of the tree on the interest rates, but the winds of economic change really affect what happens at the 10, at the 30-year rates, no matter what it is that the Fed does in the short term. And I think I've explained to you, I think people get fooled because most of the time when the Fed hikes or lower rates, it is seen as at least as well informed as any other market participant, if not in many ways the most informed market participant. And what it does is typically confirmatory of what the market expects to happen. And people like Donald Trump are sort of like individuals on the shoreline watching a wave come in, and they see the foam at the top of the wave, and they say, well, the foam must be driving that wave. And that's the way that people think of the Fed, unfortunately. And we have seen instances abroad and in the United States that even when a central bank tries to control rates and get the tree branch to bend the way they want, the winds of economic change have far more of an important effect. And so what Trump has done is induced risk into the situation. There's a good argument that because of that and some of what we've seen in tariffs, that rates are probably 1% higher than they would be if the administration were behaving. At least there are some credible economists who have estimated that. So Trump, number one, the Fed can't do what he wants. The Fed can't trick the long-term rate market into doing something other than it thinks makes the most sense. And he diminishes the credibility of the Fed and therefore puts a higher risk premium on U.S. assets to the extent that he tries to capture the Fed. And one of the important attributes that's talked about less in the United States and more abroad is something called swap rates. And the simplest way to think of, or
Right.
sorry, the swap facilities that the Fed has. The simplest way to think about that is in times of crisis, the Federal Reserve will lend other banks, other central banks money to help calm the waters. It's been a very effective tool. And if the use of those swaps between central banks becomes a political artifact as opposed to something that's done based on hard-cold economic assessment, we risk deepening economic crises or having them spiral out of control even more. And that's a risk that has been focused on overseas and not so much in the United States. So it's odd to me that the administration's trying to capture the Fed, because the short-term answers are, if they do it, it won't matter. There's a risk premium for trying to do it. And in a time of crisis, limiting the Fed's flexibility could hurt not only what it does in terms of aiding the US economy, but the global economy.
Okay, so the reason I was surprised that he actually pulled the trigger, as you put it, is that Powell's not around for that much longer. His term is ending. He's going to be gone. Trump is already naming some, pro-Trumpers that he wants to put in his place. He's already going after one of the other members of the board to try to replace her if the Supreme Court will let him. He is making a new Fed board that will listen to him, that will do what he wants. Do you have any prediction on what's going to happen when that's the situation we're in?
Well,
Not independent.
Yeah, but the rate setting group of the Federal Reserve is a number of individuals, and if Powell stays on as a member of the Fed,
right, without being
chairman, right. Now that's been done historically. It's not typically what's done, but the speculation is it's more likely he'll do that now. Technically, the Federal Open Market Committee sets interest rates. Historically, they've all basically followed what it is the Fed chair says that he or she, in Yellen's case, wants. But technically, they could force a vote, and the majority could win, even if the chairman of the Federal Reserve is on the losing side of that vote. So I think what Trump was doing was less about the rump of Powell's tenure as chair, and more about general intimidation of the Fed, specifically the Federal Open Market Committee. The other thing, by the way, is they also set Fed policy around how we regulate banks, which can also be very significant in terms of how much risk we see or don't see in the marketplace. So I think that's where Trump's trying to affect things. I actually think inherently there will be a diminution of independence at the margin. It's hard to imagine that people won't say, well, I don't really care a quarter of a point one way or the other, and I don't want anybody to open up an investigation into me. But what I do hope, and what I think the markets believe, is that in terms of meaningful decisions, it's not yet clear that Trump has a way to control the majority of the Federal Open Market Committee.
Very interesting.
Which is why the markets haven't freaked out, because frankly, if they thought otherwise,
then we'd see some of this movement that I had been expecting to see and have not. All right, another brilliant Trump move that we've been reading a little bit about in the news has been his invasion, if you will, of Venezuela, and his plan to capture the richness of oil in Venezuela. Some oil company officials seem to have a different idea about it, and that's all complicated now by the fact that he's selling oil from tankers that he has seized and is putting the money in banks, offshore banks. Very odd. It's sort of like mafia that I used to cover when we did organized crime and corruption. He's putting money in offshore banks. Tell me a little bit about this, the politics, the economics and politics of oil money.
Well, I think I've heard what I think is justifiable criticism of what the administration's doing. Number one, I think Trump's stuck in a different era when peak oil meant that we could see the day where we couldn't get oil out any faster and that the reserves would start to dwindle. That's what we used to think peak oil was. What peak oil now is peak oil demand. The economists and others estimate that by 2050, half of the energy power in the world will be solar generated, and oil and fossil fuels will become ever less significant. So the question with respect to Venezuelan oil, and most of it comes out of the Orinoco oil belt on land, is that's terribly sick stuff. It's not clear it's economical to extract it unless oil prices are potentially even higher than they've been. And it's going to take a few $billion to get production up a bit, but the estimate is, I think, $180 billion to get production up substantially. And when the chairman of ExxonMobil said Venezuela is currently uninvestable, what he means is you have to get capital, you have to spend billions of dollars. You've got to get workforce hired in country. You've got to get your people down there and safely operate and get the oil out. And these projects need to return over 20-year horizons. And
Right.
given the way 20-year plus horizons, and you've got the uncertainty of what peak oil demand means facing that type of a project. On top of that, you've got a location which is not a democracy. It's not clear what the path to democracy or even stability is, and whether or not contracts which have been violated in the past will be honored this time around for 20 years. So Trump, in many ways, has put the cart before the horse, and he's betting on only one card in Venezuela by not foregrounding democracy first. With few exceptions, and there are some, the best way to get to a economic system that you can invest in long term is get to a viable, credible democracy that people trust. And Trump's not doing that first. And the oil companies say, hey, wait a minute, we've been burned there twice. Why would we go in again to get out oil that it's not clear after the initial step up in production that's pretty easy? The meaningful step up is going to be so expensive over such a long term that we're not really sure, because of world conditions around demand for oil in the long run, as well as the stability and sanctity of contracts within Venezuela, that's going to make sense. And just to top it off, the estimate of Venezuela's, the size of their total reserves, was an estimate that came from the Chavistas. It's not something that's been confirmed. So even the number that the press bandies about is an uncertain number in terms of how much oil is there. And the other thing is, Trump's betting, the sad thing is, betting on the economic growth of democracy, particularly one that recovering from the ashes, is usually a great bet if you can husband along democracy well. And it may not be the case to 20 years from now. The best asset coming out of Venezuela is oil. It may be something else that they decide that they as a country organically become incredibly good at, or a series of things. So this whole notion that we're just going to fix the oil and that will fix the country is really based on a myopic and antiquated view of what it takes for a country to properly recover from the state that Venezuela is in.
We did not learn anything from Iraq. Has been my take on this. We thought we were going to get rich on Iraqi oil. That also never happened.
Yeah, and Rosemary, just to underscore that, the markets are still valuing Venezuelan debt at 20 cents on the dollar.
Oh,
I mean, roughly at maybe 30 cents today. But the
wow.
point is, that's a broke country.
Broke. Yep. Yep.
And the debt markets have said, oh, well, they have traded Venezuelan debt. It's traded up. So I'm going to give you fictitious numbers. I mean, the debt may have gone from 15 cents on the dollar to 25 cents on the dollar. The prospects
Right.
look like they're slightly better. But it owes $100 billion, they're estimated, to international debtors. China is 10 billion of that. China itself is a particularly difficult creditor to negotiate with. They don't ever take haircuts. They basically just extend out terms. And so, Trump has bought himself a problem. The whole, if you think about the Colin Powell Pottery Barn analogy, right, if you break it, you own it. The problem is sometimes it's so broke, it's not even worth owning. There's nothing there anymore. And it's not clear that Venezuela without a democracy is worth much of anything, whether it be in terms of oil or anything else.
I'm Rosemary Armao. This is the podcast Beyond the Brink. We're fighting back, and we're talking with Wall Street uh, analyst. I can call you that, and a banker, Mark Wittman. So we're going to go from global issues to something much smaller, Mark. Everywhere I go lately, I'm seeing signs in stores, the supermarket, the drugstore saying, because of the penny shortage, we're rounding up or we're rounding down. They're giving out little rounding formulas. What's the impact on the economy to lose a coin like the penny? And can it happen to the nickel, the dime, the quarter? Are we going to be just all bills soon?
It's a great question. The good news is I don't think it has any effect at the level of the penny. This is one of those economic phenomenon that at one end of the spectrum, the fact that we're not using a penny, we're just admitting the fact that inflation, put aside the rampant inflation during the Biden administration, that inflation, since whenever it is we started the penny, has made it a relatively useless instrument of measurement and storing value. And that's true. We're acknowledging that. How far you could climb up the coin structure before you would cause a problem, no one has a calculator that proves that. I guess I would say if you put me in charge of that analysis, I would have to go out and I would have to find a credible argument that no, this coin matters because you could buy something with it. Right?
You can't buy it with any coin, even a like 50, even a $1 silver dollar, you can't buy anything
Well,
with
I think we could all agree going to the dollar would have a serious psychological effect. That's maybe when the calculator doesn't work and you would say, no, we don't want to get rid of the dollar and only have $5 bills. So maybe we could argue all the coins could disappear. Although in Poughkeepsie, New York, where I live, you'd have to have something to put in the shopping cart apparatus to free your shopping cart.
Right.
So don't take away my quarter.
Yeah, the quarters, that's the one I give. You have to put those into like machines to park and machines to buy things out of. Yeah.
Yeah. So you probably have to stop. If we were on the committee, Rosemary, I think we'd be suggesting you don't go any further than
Yeah,
the
I don't want to
dime.
retool equipment. I don't want to retool equipment.
Yeah, I don't think we far go any further than the dime. But I think we're just acknowledging that over the last however long the penny's been around, there's been enough inflation that the penny itself is no longer useful. And I get it. There's a fear amongst consumers that businesses will round up. Although I will say, look, businesses are profit maximizing enterprises. And if they figure out that you'll buy enough of something, if they round down to make up for the diminution in price, they'll round down. But I do think the default is to round up, and that's why consumers chafe a little bit. I get it.
Wow. Well, I've always been amazed and don't quite understand even still. Like when I go into a foreign country, in Africa is one example, you go to get money out of a bank and you get huge bills, of course, that you can't spend any place. Nobody has change enough. And then you try to find change to break it down into smaller, usable pieces of currency. And it was a nightmare. You'd go to gas stations or to maybe supermarkets they had enough money they could change a $20, the equivalent of a $20 bill into something little. But in the United States, that never seemed to be a problem until recently. And it's harder to get usable money these days. I don't understand how we use money. Maybe we'll just go totally to plastic or some other AI cryptocurrency and won't have to use bills or coins at all. And I don't know if
Well,
that makes a difference to purchasing.
the one argument I've heard, and I actually do, I'm slightly surprised when places say they don't take cash, because
Yeah.
back to the affordability argument in the world, for people who are unbankable, that may not be practical. And I'm not sure discriminating against those folks in that way should be, I don't know that it should be tolerable or yeah, tolerated or
That was
legal.
a COVID thing. They didn't want the germs on the currency.
Yeah, I will tell you this. When people say, well, but now there's this thing, I'll charge you extra if you use your credit card.
Right, right. I hate
Look,
that.
I have worked with lots of people who provide credit card services to merchants. And to a person, their assertion is as follows. By the time a merchant gets done with having cash on hand, giving correct change and the errors that necessarily happen, the shrinkage that happens when you have currency around, and the difficulties around with safely getting it back to the bank to deposit it, their argument is that the 3% fee that you pay a credit card company is not that significant. It costs you more to manage your cash, frankly. And that most of the reason why you see places preferring cash is related to the non-reporting of tax.
You spoke a little bit earlier about regulation of banks. One of the things that Trump has proposed, which not a big fan of the president, have to say I like a lot, is the cap on fees on credit cards, the interest payments on credit cards. Does he have any chance of getting that through?
No, he has no chance of getting it through. A strict economist. It's interesting. This is another one of these penny arguments where there are in most states usury laws that cap interest rates at some level. So usually there are absurd numbers that banks never lend to. But the point is, if you constrain banks from charging people, you take away credit from those folks who might need credit and might be making logical decisions, even though they're paying exorbitant rates. So there's a bit of a spectrum argument that gets muddled here, because most places do have an ultimate cap. Trump is talking about ratcheting it down closer to what's the maximum that's more often used. And then you start to run the risk of excluding people from the marketplace who might need that credit, even though it's really expensive. And an analogous proposal that he made was getting rid of corporate buyers of single family homes.
Yeah.
And if you look at those larger buyers, they typically buy homes and rent them to people who don't have the credit to rent from other organizations or smaller landlords. And so, in economics, it's not just as easy as saying oftentimes, well, this looks like somebody's taking advantage of someone, we should just stop it in the marketplace. Because what you'll have then is people, in the home example, you'll have people taking other measures to get a hold of housing that they won't be able to afford, or you'll see people going more into an unregulated market if you do that. And there's no credible evidence that corporate buyers are contributing at all to the issue of housing affordability.
Yeah, yeah.
There's lots of things. Well, you want to fix it, it's a supply issue. It's not about tapping into your 401k or getting a 50-year mortgage. It's about municipalities and other enterprises that can make it easier to build these things, encouraging the construction of housing units, whether they be apartments or single family homes.
Mm-hmm. So when I was talking to Mark about the topics that I had written down to talk about today, I was surprised he kind of poo-pooed the thing about the pennies. No, he goes, you just heard him. This won't have a big impact on the economy. But you surprised me when you mentioned one thing that you do see having an unexpected impact on what we spend money on and how it affects the economy, and that's weight loss drugs, the GLP-1 drugs. Can you tell us about that, Mark?
Yeah, Rosemary, I think it's one of the underreported stories. I think the GLP-1s and that class of drugs are going to have incredible effects. I think they're running off patent, or at least it is going to be feasible during this year in some of the larger population countries like India, Brazil, and China to have the emulations of those products available. If you look at the United States alone, I think the estimate is we spend $260 billion on healthcare as a result of obesity. That's direct cost. That's not even obesity causes some problem and then we spend against that problem. I think it's a long time we get past blaming folks, and we've got this, what seems to be an incredible tool, and we ought to get to using it to helping people. I also think if you look at some of the health effects for cardiovascular health, even beyond weight loss, these drugs seem to be Alzheimer's, and even addictions to behaviors like betting and drinking. These drugs seem to have a beneficial effect. That's not to say that we're not going to have to keep working on understanding and trying to diminish the side effects. These are medicines. They're not candy.
Right.
You don't take them just because. But I do think the knock-on effects, and I saw an article that was brought up in our conversation just today that even airlines are expecting to see a benefit from the fact that they'll be carrying less weight on board. I think these drugs are one of the real cases in human history where medicine really can change our world for the better in a really meaningful way. So I'm very hopeful around them, frankly.
Wow, I love that story, that weight loss, which I would not have ever considered an economic issue, except for how expensive the drugs are right now, and that will change. And instead it has this huge impact. I would never have guessed. So my last question for Mark Wittman, financier and analyst, is this. If you were the Secretary of the Treasury right now, and Trump was treating you the way he does RFK, no matter what you do, no matter how wacko and crazy and unheard of, he supports you, and he gave you that same treatment, what three things would you do to the American economy?
Well, you mean RFK or Scott Bessent, the
Scott,
Secretary of
I mean
Treasury?
Scott, if he doesn't treat Bessinger the same way, but if he did, and you were in Scott's job, what would three things would you do?
Well, I'm surprised Scott Bessent hasn't resigned.
Yeah, me too.
I'm disappointed that when Trump pulled the trigger on the investigation on the Fed.
Right.
I think you have to have a threshold. I understand the argument of you want adults in the room. I think in many ways, Bessent seemed to me more likely to be an adult, but he's also now parroting some of the stuff on Greenland.
Yes.
Yeah, which
He's with them. He's with them now in Switzerland too.
Yeah, so he's, you can see this Kool-Aid stain on the upper lip, unfortunately, on Bessent. But what do I think we need to do? I think the affordability issue and recalibrating how we provide support is really important to the United States and to our economy. I think if you look historically, if economic inequality, if the gap gets too wide, societies don't continue to thrive, and eventually they don't continue to be. At some point, we've got to deal with that chasm, and I think we've got to take steps to do that now. That would be my first change. Secondly, I would change the Fed policy so that they watch the money supply and basically grow it as the economy grows. Basically, put more dollars in as we need them to do more business, but no more than that, because I think that's what otherwise causes inflation. And I do think we need to redo regulation. I think there are places where we need to be more careful about what we're doing. I mean, frankly, crypto is basically a currency. It's sort of like modern art for criminals. It's a currency that criminals can use and that other people can talk about and admire the fact that they've got some. I think we need to regulate it far more heavily than Trump will, given his family's ties to it now. And I do think there's still work to be done in banking regulation, where you can say, if I'm taking risk out of some of these non-bank areas, I can make the banking regulation more sensible and update it as sort of an overall package where I'm taking down the risk in the economy dramatically, but I'm doing that through a mix of both increased care in the non-bank area and maybe a little bit of liberalization in the already regulated parts of the market.
Okay, that was pretty coherent. That was pretty great. If you didn't quit, which you would want to, maybe because of Trump's action, these are the things you would do. Thank you, Mark Wittman. He's been talking to us about the many economic issues in the news these days, and we conclude our podcast weekly with a toast. Have my little wine over here. And my toast today, I thought about it. I can't really toast the economist because they're just very confusing, except for you, Mark, of course. They're very
Thank you.
confusing, and as you say, the measures are all off, and who knows what the heck they're talking about. And it can't be for the political people in charge these days. They're making a mess of it all. I'm worried about Wall Street. I don't see any good guys to toast. So I'm going to toast the 25th Amendment, which may not get used. Don't see it happening anytime soon. But somebody thought this is a check and balance we need in our Constitution, and they put it in there. And I look to that with some hope, maybe someday. Thank you.
Yeah, Rosemary, I agree. I'm befuddled as to why Republicans on some of these issues, particularly Greenland, aren't coming out and telling the president, you put a single boot on the ground and we'll take you out. It's
Right.
just that simple.
Right. The checks and balances are in our Constitution. This should not be happening, and it is. It's a capture. It's a state takeover by, I don't know. Some days I think Donald Trump is not smart enough or not in his right mind because of dementia or whatever, old age. And other times I think, wow, how has he done this so quickly and so apparently easily?
So I'll join your toast, but let's toast both the section of the Constitution, not only the 25th Amendment, but the impeachment and removal discussion as well. I think they may be equally important.
Okay, I'll accept that change, that amendment, and mostly it's important to drink right now. Thank you.
It's always a pleasure, Rosemary.
You too, Mark. Take care.